लाइव
Hello.
हो गया। अब आप स्टार्ट कर सकते हैं 10 सेकंड के बाद से।
Thank you, Sanjay ji. So, hello everyone. Thank you very much for joining this session. And thank you, Tax Guru, for this opportunity once again. Today, I'll be covering a very important yet overlooked topic, critical tax issues and solution. So, did you know our Indian tax system is extremely vulnerable? So, let's find out in the next slides. Started with this session. Before we get started, as the topic is quite popular and important, you may get a lot of questions in the middle of the presentation. I would request you to note down these questions and save it towards the end of the session because most of it is likely to be covered in the FAQ section. So you can feel free to comment on the pace of the presentation. If you feel I'm going too fast, you can let me know. If you're feeling I'm going too slow, you can let me know. So what are the critical tax problems and solutions? So only if we have an important problem, that important solution to an important problem in the society, it is worth sharing. And critical tax problems is one such problem. So to understand how critical our tax problems are, let us understand tax vulnerabilities. So to understand how vulnerable our tax system is, let's take a very interesting example. So you and your friends decide to donate blood for a noble cause because you trust that blood donation agency's credibility. So because you have made a generous blood donation, an ambulance will be awaiting to take your blood sample to the concerned patients. But on the way, the ambulance meets with an accident, making your blood donation go waste. So this is exactly what is happening to our tax system. We are paying lots and lots of tax, yet our government is not getting sufficient revenue out of it. And this is because our tax system is extremely vulnerable. It is the system which is problematic. The tax institutes are doing their job correctly. There are very few tax evaders, but because the tax system is so vulnerable, today, no matter how much the taxes are, the government revenue is very poor. And we will be seeing in the future slides how poor it is going to be. So did you know that India has over 12 types of taxes? Some websites say it's almost 20 types of taxes. Even having 12 types of taxes, the direct taxpayers pay 50% of their income in the form of taxes. You might be thinking 30% is the tax slab limit. How come it's 50%? Well, it is like this because a direct taxpayer is also a consumer and he also pays a good amount of his money on indirect taxes as well. And if you put both of these together, they're nearly paying 50% in income, in taxes. 50% of their income goes in taxes. And in spite of that, India's tax collection, India's tax collections are only 5% to that of United States of America. Why I'm bringing the comparison to United States of America? United States of America is the world's second largest democracy, and India's population is 4 to 5 times that of US. So ideally, our tax collection should at least match US, but we are only 5% to that of US. And the main reason is our tax laws lack inclusive taxation, in the sense, a very few people are paying lots of taxes. Whereas in US, 80% of the people pay income taxes. In India, only the people in the corporate sector or the industry sector, because the employees automatically get a PAN card, they pay taxes. Otherwise, many of them don't pay taxes, or many of them don't know whether they have to pay taxes. So what are the problems with low tax collections? The first and foremost thing is HNI migration. A HNI or a high net worth individual is equivalent to at least 100 or 200 direct taxpayers. And their exit is a huge revenue loss for the country because they are frustrated paying high taxes and they are not seeing the benefits and they are migrating to a country with a better infrastructure, or they are migrating to a country with lower taxes. Inflation, as strange as it may sound, it is very true because since government do not have enough funds, they will not have any kind of regulatory authority on many sectors like real estate, FMCG, and many other sectors. So when they don't have control on the other many other sectors, the private players will start increasing the prices for genuine or their own personal interest reasons. High debt. Now, when government has very poor tax revenue, they have to rely on external or internal debt. So when the government takes a loan, when the government takes high debt, that's when taxpayers become even more vulnerable because if government is unable to pay the debt back, then the taxes increase. And understaffed government organization. Now, this is a very, very serious concern. Even today, many states do not have that many police officials deployed. So a lot of risk happens when you don't have the police forces in a particular state. And and that is solely because government do not have sufficient funds to recruit more police into the respective police stations under their state. And another problem is dependency on public-private partnership. And these public-private partnership cost us dearly when we pay our toll taxes, whenever we use a highway or an expressway. So because government is short of funds, they have a partnership with the private players. And because the private players need to also make money, they will start charging tolls on their highways as per the government's um, policies. So since I am a data engineer, I have examined the data very carefully and I found a solution to this problem. So in the future slides, I'll be showing by using Government of India's financial data, we'll be solving this very pressing and important problem. So you must be wondering how. So let's get started by understanding tax revenue and debt. So tax revenue and debt are the two crucial components. Tax revenues is an indication of whatever tax that we are paying. Once it goes to the government uh, fund, it becomes a tax revenue. Debt refers to whatever loan government has taken, loans governments have taken. Now, when I say governments have taken, I'm talking about debt taken from post-independence all the way until now, from Jawaharlal Nehru government to Modi government. So this link you must have seen in the prerequisites. So I would have shared that link in the prerequisite of the meeting. Even if you have not gone through it, that's okay. So this is a table which represents the government revenue information. Okay. So I'm going to the latest year, 2021-2022. because this is says RE. RE means revised estimates. BE means budget estimate. So that means it can change over a period of time. So first let us understand there are basically two taxes. One is direct taxes and one is indirect taxes. In direct taxes and indirect taxes, we are only interested in the net direct taxes or in the net indirect taxes. The gross taxes makes no sense because it includes all the refunds. So that's why I have come to the net direct taxes and net indirect taxes. So net direct taxes is approximately, you can see the number is in crores. So it is 8 lakh 8,800 crore rupees. Same way, net indirect taxes 9 lakhs 56,345 crore rupees. So net total collection is a summation of net direct and net indirect taxes. It eventually adds up to 17 lakh 65,145 crore rupees. So this is like, it's like 8.088 lakh crore rupees. So we will be using lakh crore as the benchmark to consolidate taxation information because this number is extremely huge, but still a poor revenue. In terms of representation, if we can't use a regular number system, so we go to a lakh crore scale. Now coming to debt position. As I said, debt position definition wise is the total debt that has been taken all the way from Jawaharlal Nehru government to the latest Modi government. All that loan amount put together is our debt position. So we have a staggering 168.72 lakh crore rupees. Remember, our net taxes was at 17.65 lakh crore rupees. Where is 17.65 lakh crore rupees and where is 168.72 lakh crore rupees? And in the footnote, they're telling that it can even go all the way to 172.37 lakh crore rupees. So this is an indication of how vulnerable our tax system is. If our tax system was efficient, we wouldn't have 1/8 or 1/9 of the debt position. We should still have a pretty healthy revenue collection. Now moving forward, so this is an important skill to consider. 1 lakh crore and 1 trillion are the same. Just for the record, the US tax collections was 376 trillion rupees for the year 2021, and our tax collections for the year 2021 was just 17.65 lakh crore rupees. So we come to the ray of hope, we come to the climax, and so we will explore digital transactions and DTT. So in 2016 November, demonetization was announced. And when demonetization was announced, the government decided to give a huge push for UPI payments, NPCI payments, and all digital transactions. The only reason being digital transactions leave behind a footprint. It's easy to trace. And today government only is given certain information. And by using this data, I will be explaining how we can solve our tax vulnerabilities. So let's get started. So this is the data which tells the total number of transactions. Okay, total number of digital transactions. In the year 2017-2018, it was 2071 crore transactions. That means there has been 2071 crore transactions in UPI payments, in card swipes, in debit card, credit card, online banking, etc. But in 2021-2022, there has been a 380% increase to 8,840 rupees. I'm so sorry. I'm so sorry. It has been increased from 8,840 crore transactions. So this is not a small number. And just see this. 2022-2023, they have written 9,192 and they have put a star. And if you see the star, it's saying that it's only after 31st December 2022. It's still not the complete financial year. So we are already ahead of every year, this number is only increasing. Now comes the next important value. It is the value of the digital transactions. So you see, in the previous slide, government told how many digital transactions happened. Now they're telling how much of it was it of the worth. So it is 3,021 lakh crore rupees in 2021-2022. And our tax collections was 17.65 lakh crore rupees. But just see this. This is a pretty huge number. 3,021 trillion rupees is a very big number. So we will consolidate all the data that we have seen so far. So let us go slide by slide. So our net tax collection was 17.65 trillion rupees. Direct taxes were 8.088 trillion rupees for the year 2021-22. And the indirect taxes was 9,56,345 rupees. Our debt position as of 31st March 2024 was 168.72 trillion rupees. As of March 2025, it is basically 12% interest on this amount, which adds up to 183.67 trillion rupees. The value of digital transactions, we are seeing it is 3,021 trillion rupees. So let's plot them in a table. So direct tax is plotted here, indirect tax is plotted here, total taxes is plotted here. And we are telling that on 3,021 lakh crore rupees, you just put 2% tax, digital transaction tax. And still that comes to 60.42 trillion rupees. It is 3.42 times of 17.65 trillion. Now this is a very, very significant data discovery. We just took 2% of digital transaction tax and we managed to get 3.42 times of existing taxes. Now, if you compare it against individual direct and indirect tax, it is 647% more than direct taxes and 532% more than indirect taxes. So basically what we are saying is, if you abolish direct and indirect taxes and you just put digital transaction tax, we are getting 3.42 times revenue. And 3.42 times of revenue means if the road budget was just 1 lakh crore, it can be 3.4 lakh crores. If the investment on from the government side on education institutes is 2 lakh crores, then it can go to 6.84 lakh crores. So the benefits are immense with just digital transaction tax. Okay, it is the same tax that has become more active since 2017-18. Whatever that swiping you do at your nearest POS machine or to your nearest vendor, from that only we could achieve this much of revenue. So I'll just take a small pause here I think I've spoken enough, too much to digest. So I'll just take a small pause and I'll go to the so in the present situation, an average taxpayer pays nearly 50% of his income in the form of taxes. So how can we make life better for him? And the next section covers that. We are going to walk across various salaries and see how much it is going to benefit a taxpayer. Okay. So we have seen that digital transaction tax was a 2% proposal from the government perspective. But at an individual transaction perspective, it is a 1% proposal. What it means to say is, if I am a buyer, I decide to buy goods for 1,000 rupees from a merchant. The buyer charges me, 2% on 1,000 rupees is 20 rupees. But as a buyer, I pay 1% of 1,000 rupees. As a merchant, the merchant pays 1% of 1,000 rupees. So when both of them pay 10 rupees of transaction tax or a digital transaction tax, we achieve the goal of 2% tax. And transaction always happens between two tax-paying entities. Hence, a 1% tax would ease the burden. Now, even if we do a 50% split of this tax between the state and center, it is a healthy distribution. So, DTT can also be aggregated and computed in a quarterly manner. So, it is not that as and when I make a payment to the merchant, I should eventually have a notification and deduction of tax. It can be aggregated over a quarterly period or monthly period based on how the bank prioritizes it. So 1% of digital deposits and 1% of digital withdrawals is what digital transaction tax is for a taxpayer. So make note of this formula. This formula is quite an important one to understand the future slides. So let's take a salaried employee one. I have taken some of my friends' salaries and try to demonstrate the benefit. So there is a friend of mine, Mr. S. He's earning 18 lakhs as income. He's having 10 lakhs as expenditure. And as per ITR old tax regime, he's paying 1,81,192 rupees as income taxes. It's not, I remember, I have not included the GST and other things. Only income taxes is 1.81 lakhs. Now, digital transaction was the income plus deposits plus withdrawals. So, deposit is salary, withdrawals is expenditure. So, it comes to 28,000 rupees. So, what is the savings that we have got? We have got 1,53,192 rupees of savings. Now, this is 85% tax savings. Now, if I had I included even the GST component, this would be more than 85%. Similarly, we do for people with multiple income streams. So there is a Mr. V who earns 40 lakhs from his normal work salary. His side income is 2 lakh rupees. His expenditure is 30 lakh rupees. As per new tax regime, he's paying 7 lakh as the taxes on top of 40,000 or 40 lakhs. But if you see the DTT, it is just 72,000 and ITR income tax return is at 7 lakhs. So we are giving a tax benefit of 6.28 lakhs. In just 1 year, we are giving 6.28 lakhs. And again, I have not included GST or the petrol taxes or the fuel taxes. If that is included, the tax savings is higher. And tax benefit is up to 90%. So I believe we are addressing the critical taxation problems. So our biggest challenge in the society was that we are having high taxes because we have a lot of debt. So what if I show you that digital transaction tax can even clear our national debt position? So let's try to understand that aspect as well. So if DTT can clear national debt position, then this is a very significant tax regime because any government would be very happy to have their debts cleared. So we have to make two assumptions. One is we want to reverse our direct taxes from 2017-2018 onwards. And second one is we want to apply digital transaction tax for the same period. Why I'm giving this proposal is direct taxes, if you see, an individual files direct taxes once or twice a year in the form of ITR returns. And all these ITR returns are saved in the income tax portal, income tax government portal. And as far as digital transactions are concerned, we know even you can look back 5 years of where you spent your money on if it was a digital transaction. But if it was a cash transaction, you wouldn't know it. So, and again, we want to remind you that our debt position as of 31st March 2024 is expected to be around 168.72 lakh rupees. So we do something called retrospective impact. In just 5 years of data, I will show you how we are solving our national debt position problem. Our national debt position was around 168 to 172.5 trillion. Our current revenue tells what are the taxes collected so far. Our digital transaction tax represents the DTT. And our projected revenue is nothing but a mathematical representation of our assumptions. So we are telling that we'll take digital transaction tax, we'll subtract direct taxes, and we will not do anything to indirect taxes. So current revenue minus direct taxes is indirect taxes. So every year's digital transaction value is plotted here. DTT is computed at 2%. Current revenue value is consolidated. Direct taxes value is consolidated. Projected revenue is computed. So since 2021-22 year is very familiar to us, so we know 60.42 was the digital transaction tax, 17.651 was the current revenue, 8.088 trillion rupees was the direct taxes, and our projected revenue has come to around 70 trillion rupees. Now 70 trillion rupees is the projected revenue. If all our direct taxes is, we are getting a number that is 70 trillion rupees, which is 296.47% more. Now we will come to the column of current revenue. So current revenue column, if you see, if you add up all the numbers, we won't be able to clear national debt position with our 5 years of current revenue. Remember, current revenue doesn't mean that all the money should go and repay the debt value. From current revenue, lot of funds are taken for government schemes. But even if I say that I'll take only the current revenue, then then also I won't be able to clear the national debt position. But you just take a look at projected revenue on the other hand. Projected revenue is nothing but your digital transaction plus indirect taxes. That number, only 3 years value is more than enough to clear the national debt position. Just 3 years of projected revenue. If you think that this doesn't sort out the critical tax problems, then please make a note of the question that you have and say present it towards the end of the session. But I believe that this is one of the very important steps taken to solve the tax problem. Now let us graphically compare current revenue and our projected revenue. Just see this 12.42 trillion and 45.45 trillion. It's almost 3.5 times. Everywhere it is 4 times. Sometimes here it is almost 4 to 5 times. Here also it is almost 4 to 5 times. Here it is again 4 times. So there has been a significant increase in projected revenue. And yeah, if you notice in some years we have got 20% revenue growth. And you will notice that in parliament people will tap the table because we got 23% of growth in revenue. But let's be realistic. Even 23% growth in revenue does not solve our national debt position. So impact on other transactions. So digital transaction tax was just one example of banking transactions. There are other banking transactions also that have the same weightage as digital transaction tax. So cash transactions. So cash transactions constitute 20 to 25% of the national transactions. But we should discourage people from doing cash withdrawals. Cash deposits to bank is okay, but cash withdrawals is something that should be highly discouraged. So we are trying to say that if the digital transaction tax is at 1%, then you can levy a 4% tax on cash withdrawals. We believe that would be an appropriate proposition. That would also make people use the digital transaction tax route for their withdrawals or money transfers. The next version is check or DT transactions. They form like 10% of the total transactions. But in terms of value, they are quite high. They are almost as good as our digital transactions. If you see Shark Tank, the sharks are giving checks to the entrepreneurs using checks. They're using check to give them to buy a stake in the entrepreneurs organization. And that's how the format of the show is. Nobody does a Google Pay or a UPI in that show because of the high value involved. So we are telling that whatever you levy on a digital transaction tax, you do the same thing on a check or DD transaction tax, check or DD transactions. So that way, people can choose as per their convenience, whether they should write a check or whether they should do a UPI payment. Now, lastly, it is the loan transactions. If I want to buy a house worth 2 crore rupees, um, levying a digital transaction tax on the 2 crores is not appropriate. But I choose to pay EMI of those 2 crore rupees. That time, levying a transaction tax on the EMI amount would be a significant gain for the revenue. And I think they are already a part of digital transactions. So Arthakranti is one such institute which made this proposition of bank transaction tax. They were the ones who proposed demonetization, but somehow bank transaction tax really couldn't come into implementation because due to demonetization, already the bank employees were super exhausted because of the sudden increase in workload, and there was no supporting data. But now we have all the data. With the digital transaction tax only, we are able to clear national debt. Just imagine the kind of power bank transaction tax would hold. So if the government and banks have all the necessary data required for bank transaction tax, then it would be a very big win-win situation in solving our vulnerable tax situation. So let's go to our frequently asked questions. And now I would suggest you please keep your questions ready. If your questions is not listed in these FAQs, please feel free to ask by the end of the session. So because I showed so much of tax savings, there are people who are thinking that I have a lot of knowledge in the existing tax laws. So they asked, can you help me file ITR returns for this year? So, so I just want to clarify, we are not an institute that helps in filing ITR returns. You may contact institutes like Tax Guru or any CA for efficient tax filing using the existing tax laws. We only analyzed Government of India's financial information and came up with a 1% tax proposal. So I hope it is clear that please don't ask me that you need help in filing ITR returns. I am not from a chartered accountancy background. I am a data engineer. I come from a technical background. So you can reach out to Tax Guru. They can help you maybe. But India is fastest growing economy. You're saying government is corrupt? So we became the fourth largest or fifth largest economy, but that really doesn't matter. In a growing economy, healthy tax revenues are equally important for any country. We are not blaming any entity. We are highlighting the flaws in the taxation system using government submitted information. As I said, our tax collection is just 5% of United States. In United States, you don't need to pay toll taxes. In United States, there is something called 401k retirement for every senior citizen. In United States, grade 1 to 12th, grade 12 education is free. But today here, how much are you spending on your children's education? How much are you spending in toll? How much are you already saving for your retirement and still realizing it's not enough? So this is what we are, a growing economy. But if the fundamental needs of any human being is not addressed, or any individual is not addressed, then having a growing economy makes no sense. Yes, we are happy that it's a top 4 growing economy, but don't celebrate too early. Will the government show resistance in implementation? So you heard about the Lokpal movement, right? in that they were trying to bring a lot of corrupt officials into the custody. But government could not do it because they didn't have sufficient funds. It's not that they didn't want to do it. They didn't have, mainly they didn't have sufficient funds. Now recently farmer protest is going on. They are also asking for more government funds for them, for the schemes of farmers. But unlike other proposals, whatever I have proposed, it is increasing government's revenue 3 to 4 times. The amount of changes that we are asking is very minimal. It is just about reorganizations and reorganizations and coordination with banks can achieve this goal. So with the minimum workforce involvement, we are able to achieve 3 to 4 times of revenue increase at just 1% of tax. We are hopeful that the government, if they get to know about it, would not show resistance. Because when you're showing profitability to government, they should not have a problem with it. So there are two perspectives to these questions. Will DTT or BTT happens instantaneously, meaning that as soon as DTT is implemented, will BTT come into picture? Or as soon as I levy a DTT, should I be automatically intimidated with the intimidated with an SMS? So that's what is the meaning of this question. So I'm answering both the perspectives. So it need not happen instantaneously. It can happen over a period of monthly or quarterly basis based on government and bank priorities. Also, digital transaction information is available in the public domain, but banking transaction information is something that only RBI has. So RBI should also make that information in the public domain. Then we will know how much of tax gains we are going to get. Can we remove indirect taxes completely if DTT or BTT is implemented? So indirect tax complete removal is very difficult to gauge. So it is mathematically possible. Technically, it's not so easy because suddenly firing people will not help. So, but yes, the percentage value can be reduced slowly. A very good example is for internet, we are paying 18% of GST. But today, internet is not just a commodity, it is a necessity. So, we can request the government to bring it down from 18% to 5%. And that way, we can slowly get rid of indirect taxes. Want refund transaction be taxed twice? So this is a very good question because we have the habit of purchasing many things from e-commerce websites, and because they encourage returns, uh, for that perspective, if you do, that time you will be double taxed. So refund transactions tend to get taxed twice. Yes. However, proactive collaboration between vendors and banks can remove the complications of duplicate transaction tax. So it should be the vendor's responsibility to highlight the transaction ID that has become a part of this duplicate transaction so that banks waive off the taxes on them. And this is a very, very important question. I think many of you, if you're listening to this session, also will have this question. I don't fall in the taxable income slab. How is your tax proposal helpful for me? Well, it is important to note that direct taxes are not the only taxes Indian citizens are paying. You would be spending nearly 5 to 18% of GST on your basic purchases, and in that perspective, DTT or BTT would be much cheaper because DTT was at 1%. Here you are paying 5 to 18% of your GST. So if you don't fall in the tax slab, you actually do a consolidation of your expenditures from and see how much of it is really GST. And if you are filling petrol also on your bike, that is like 50 to 60% taxes of VAT and octroi and other things. So please don't be under a false impression that because you're not in a taxable slab, you're not paying any taxes. You are also paying taxes. It's just that you don't realize it. So I want to share this on social media. Can I do it? So firstly, thank you very much for your support. Yes, you can leverage social media platforms to spread this message of fair taxation by trending DTT, BTT on leading social media platforms, and also spread it to the people in your friend circle who you can share this video, this session to your friends, and even they will get educated. Firstly, there is lack of people education on taxes. The moment you announce taxes, people are little already they have lost hope because that's how bad it is. So educating them about the vulnerabilities in taxes and then solving the situation is makes more sense. I like this tax proposal. How can I let government know? And will they do anything to me if I let them know? So the answer is yes, you can make your voices heard. I have filed more than 50 grievances to the government institutes. I didn't face any kind of challenges from them. Yes, feedback calls I do receive. But apart from that, I never faced any kind of harassment or threats as such, even though I have raised on some very serious issues. So here you can how you can voice your concerns. So see, this is in social media. The difference between social media and government portal is just this. In social media, if you post, maybe your voice may or may not reach the concerned authorities in the government. But in if you go to government portals like MyGov and Right to PM, it it is it comes under the surveillance of our honorable Prime Minister. So these two portals got created when Modi first came to power, just in case you are not aware. So what is this MyGov portal and what is Right to PM portal? So here it's very important to understand. MyGov portal is your ideas and suggestions only they will consider. And please note this is a very important point. Digital transaction tax, banking transaction tax, they're all ideas, they're all suggestions which can help the government function efficiently. But in Right to PM, your grievances go there. I am paying very high taxes and it's completely unfair. I'm also paying toll charges. This is also unfair. Why so high GST we have on essential commodities like internet? This is a grievance. So know the difference between ideas and grievances. Many people make the mistake of filing grievances in MyGov and ideas in Right to PM. Please don't make that mistake if you plan to do so. But I strongly encourage you, if you find substance in this particular video, you can share it to the government. So in democracy, only if 1,000 people protest, that time government can will consider changing the policy. But I'm not asking you to go to the streets and protest. Here, volume matters. Excuse me. So volume matters, more grievance and more suggestions. So if more grievances and suggestions flow, then there will be serious chances, better chances for consideration. So do I have a social media presence? In a very little way, yes. So I have my WhatsApp channel. In that, I have tried to make sure that you understand about DTT in under 10 minutes. Here, I'll post links which have on articles written in Tax Guru only. So this is my WhatsApp channel, and you can scan the QR code and join this WhatsApp channel. So it will be a one directional thing. Like whatever I post, you can just see it and you can forward it to your friends if you find it useful. The second one is a more important channel, and this is only to break the language barrier. In my YouTube channel, I have in the same page name Tax Reform India. If you search youtube.com/@tax reform India, you will find you will also find the link for the WhatsApp channel. And the captions are in 14 languages. Okay, not one, not two. In 14 languages, I have explained the same video so that the captions are in Hindi, Gujarati, Marathi, South Indian languages, so that the community can understand even if they don't know fluent English. But if they can read other languages, they'll benefit from this. So let's do a quick summary. And after that quick summary, I will look into the questions and see if any important questions is there. So this is the current situation. Less people paid more taxes, right? And I saw somebody in the comment mentioning that it would be good if more people paid more taxes. But we have an exclusive tax regime. Only a 5% population is in the taxable bracket due to the poor tax laws. It's not that we can't get more people into the taxable framework. Only about, like I said, 5% population paid taxes. High tax regimes, we have 28% GST as the highest limit, and we have 30% taxes as the highest limit. And in spite of all this, we are only 5% of US tax collections. Now, the future situation, we want a lot of people to pay less taxes. We want an inclusive tax regime. A majority of the population should pay taxes. Otherwise, a country of 140 crores cannot sustain. So it is estimated that 89% of the bank accounts were involved in digital transactions. So I am saying that almost 85% of the population will start paying taxes in as per my tax proposal. That's why 1% is still giving 4 times revenue. Right? There is no rocket science done. And this is the lowest tax regime of 1%. And almost 15% of US tax collection at just 1% DTT. 15% we are already getting with 1% DTT. If we make it 2%, it becomes 30% of US tax collections. So I'll now see the questions one by one. Please give me a moment. Yeah, so I'll go backwards first. Anup Kumar Srivastava has asked, what about persons having salary of less than or equal to 7 lakh in the proposed tax regime? So Anup, it is a very simple answer. Whatever it now, it is not just salary, it's also about expenditures, digital expenditures and digital salary on that 1%. Somebody said, Senthil says now only a very low bracket people support the revenue system by paying taxes, which is correct. GST rates are now more high for services and other sector. For this, DTT will be very less to implement. I think I'll do one thing. Uh, so I'm just searching the questions, and what I'm thinking is I'll insert a new slide, or I'll insert a new notepad. So So Senthil Ayacham, he says that now only a very few low bracket peoples only support the revenue system by paying taxes. GST rates are now more high for services and other sectors. For this, DTT will be very less but difficult to implement. So one thing I want to call out is when I consider digital transactions, most of the digital transactions have GST implemented on top of it. So DTT won't be difficult that way. So to remove indirect taxes completely, maybe it will be difficult, but DTT won't be difficult that way. And again, from Senthil, I have received this suggestion. As of as of me, to increase the number of taxpayers, this will help. Huge revenue may come to government hands and may do more infrastructural or essential projects for nation's development. This is exactly what I said. When a lot of people pay less taxes, still huge revenue comes to the government. And that is what DTT and BTT does. And in digital transaction taxes, 89% of the population is involved in transactions. Mm. There was somebody who raised this question. I don't know the name. So because of DTT, people will avoid using UPI transactions. No, that is not completely true. I have covered the cash transaction section in which I am suggesting that if you do cash transaction withdrawal, we will put 4% tax, and so that people are encouraged to use digital transactions. Tax should be. So this is one more question which I got. Um, Tax should be only be charged on income earned, not on transactions done. A lot of developed countries like Japan are using transaction tax. Okay, so there is no hard and fast rule. Maybe I think this is coming from people who have chosen finance as their subject, but it's not necessary. See, income is also a transaction. Why is it that only income should be charged? Why isn't expenditure charged? So, but may okay. So, but I think this proposal will benefit only rich class of people. It will increase burden on people having low income. I wish I could interact with this person one to one, but this is not true. See, today a lot of rich class people are taking agricultural lands and then they're reaching out to their CAs and taking tax exemption. Okay. But if digital transaction tax is considered, their transactions will be in crores of rupees, and in that we are taking lakhs of rupees from them as taxes. But herein it will increase burden on people having low income makes no sense. Like if somebody's income and expenditure is 1,500 rupees per day, as per DTT, it will be 15 rupees per day. So 15 rupees is not a big burden. I'll come to all the questions, but sir, if I do 10 digital transactions in a day and there is okay. I'll come to each and every question. Thank you so much. Thank you so much for so many questions. I think this is but sir, if I do 10 digital transactions in a day and pay 2% DTT as proposed by you on every digital transaction, then the net tax rate paid by me would be 20% in just one day. Okay, let's do the math. Okay, first of all, let's say you do 50%, 50 rupees transactions, okay? And it's not 2% digital transactions, it is 1% of digital transaction because the other 1% would be paid by the person whom you will be sending the money to. So 1% DTT is 50 paisa, right? Now you're saying you will do 10 such transactions. So 50 into 10 is makes it 500 rupees, and for 500 rupees you're only paying for, if you say into 10, okay, 500 rupees would make it say again at same 1%, which will be 5 rupees. So I don't know how you came to the conclusion it's 20 rupees. It is still 1%. So okay. I think the previous question was, so Anup Kumar Srivastava. Okay, so all these questions were asked by Anup Kumar Srivastava. Anup, if you still have any doubts, please feel free to ask in this chat. So I think there is a misunderstanding. I have not said that uh, it's a 1% at an individual level, 2% at a government level. That's how digital transaction is computed right now. Hmm. Is it not discouraged? Okay, now I got one more. So Sanjay Chatterjee, is it not discouraged to do digital transactions and back parallel economy? No, when you're doing digital transactions, you are not backing parallel economy. When you indulge in cash transactions, you are backing parallel economy. Parallel economy is when you indulge in, you see, if you go to certain real estate projects, even today, the broker still insists on cash because he wants to run a parallel economy, right? So cash transaction encourages parallel economy. Digital transactions do not encourage parallel economy because they have a footprint. Every digital transaction has a digital transaction ID. Now with that, it is impossible to uh, encourage parallel economy through digital transactions. So Sanjay, I hope my question is clear. I think I'm really happy to see so many questions, and I really thank all of you who joined this call also because honestly, I didn't. I thought due to short notice, not many people would be able to join, but I'm so happy that you have come here and asked some really intriguing questions. So, so is this my only session in Tax Guru? No, I have done similar such sessions. So there is a session called Why India Needs Urgent Tax Reform and Digital Transaction Tax Revolution. But in the previous two sessions, I didn't have so many questions. But now I am getting so many questions. So these are the other things. So please let me know in the comment section. Do you want session in Hindi? So if you want session in Hindi, I will be able to give it next week. But yeah, my Hindi is not strong. But if you still want, I can uh, conduct a session. So if you have even more questions, I think after the live session also, you can please comment it out in the comment box of this video. Uh, is there any more questions? Sanjay ji, is there any more questions?
No, sir. No more any questions, sir.
Okay. Uh, Okay, thank you, Sanjay ji.